Good afternoon, traders. Welcome to this week's weekly wrap. So I just wanted to start with something quickly that I had an interesting question on YouTube, basically asking why we don't do any sort of price prediction or anything like that. It was more covering what has happened, and it was a good question, and it is exactly what we are doing with this video. So I try to keep any type of trade ideas and not forecasts, but just basically trade ideas, what looks interesting to me, and we break down a little bit more as where we may think price will go. What we don't want to see, the sort of invalidated and those type of things. So they're done on a daily to semi-daily basis as catch the latest market movements. So if you are more interested in things like that, yeah, definitely have a look at those as they come up on our YouTube channel. But yeah, back to this video. This is really just a recap of what's happened this week, some of the interesting things, and a bit of a look out to the news next week. So yeah, it's definitely intended to be just that. And yeah, I do try to put in levels, so interesting levels that we are looking at, say as support and resistance. But I definitely won't be trying to forecast anything on this video. So just wanted to clear that up in case anyone was really wondering what is the true purpose of this video. And it really is just what it is, just a recap and an outlook to some of the news next week. So without that out of the way, I also want to try something a little bit different today. Let me know your thoughts on it if you don't like it. So I'm going to be keeping all the charts in a weekly time frame, so we can really have a look at what has transpired this week, and some of the key levels on the weekly chart as well, which I find quite important. So if this doesn't help you, and if it doesn't interest you, if you think it's much too high in terms of time frame, please let me know, and then we can revert back to the daily. So we're just going to go through some of the key things this week. So obviously Australian CPI for the Aussie dollar was a factor. CPI came in lower than expected at 6.3% on the year-on-year. Trim mean came in at 1.2, but the quarterly figure came in slightly higher at 1.4%. But even though we did see that small increase, the overall figure is down, and the general word coming out is that's good. They are even seeing that the possibility of inflation has peaked and will continue to run down. It's still at 6.3%, but they're looking. It's a lot more optimistic now about that, and we can really see that how that transpired with the Aussie this week. So we can see this real strong move down, and there is a lot of key resistance here at 67.08 to 67.10. We've seen a lot of failed attempts here in previous weeks to try and get above that area, and we're going to get onto the US dollar in a moment, as it has also staged a bit of a recovery late in the week. So we can just see all of this supply here that's feeding through, and yeah, sellers really got stuck into the Aussie. Now the Aussie yen was down a fair bit as well, but things did change today, and we'll talk about that in a moment with the Bank of Japan. It's had a negative effect on the yen, and we're seeing a lot of buying to the yen at this point in time. So the US dollar, we will have a look at that. So the dollar, as you can see, has pulled back from a decent test lower during the week, and it was driven lower as risk markets sort of started to churn up a bit of momentum. It has fought back late in the week, and we are looking at this level right here at 101.40 as key support at the moment. It continues to hold for buyers, and we're continuing to see attempts by sellers fail and be pulled back in. So the current trend's still down, moving averages are still pointing down. There's a bit of resistance here at this 101.65 area, but at the moment it's looking pretty flush and pretty supported below that 101.40. So keep an eye on that level at 101.40, just on the dollar index, to see if it can spawn into something a little bit more. It's interesting as well, because even though we had some data out last night, there's unemployment claims, and it was better, but the advanced GDP was lower than expected. But this has continued. It drove stocks higher. We saw some very good moves yesterday, breaking a bit of a weird week so far for stocks. A few ups and downs, but the data is actually seen as possibly helping risk markets and maybe taking some pressure off the potential of more rate rises, as if the economy is sort of slowing down a bit, then that was really seen as a bit of good news on the inflation and rate side. But we'll see what happens with the next meeting. There is a bit of talk that the next meeting may be not really much of a meeting, and the message maybe just to see how it's all going, and we may potentially we'll see what the forecast is for if we're going to see rate increases or the odds of a rate hold. So at the moment we are seeing the dollar higher, but if we look at some of these stock indexes, you can see this really, we'll just jump over to the daily here. We can see yesterday's very strong move that sort of saved the week. So this is across all three of the key US indexes. So we can see the Nasdaq here and the SPX 500 all put in really strong single day sessions. So we do have a bit of more, we have a little bit more USD news coming out later. We'll touch on that in a moment, but so we can just see that response there. The Nasdaq as well as the SPX. There was also a little bit of help from some earnings this week. So Meta, a few other key companies reported earnings. There was mixed earnings data. Some of the guidance was down, but the earnings was up. So Meta surprised yesterday as well with its earnings data, and it definitely contributed to some of the demand that we saw yesterday for stocks moving higher. So just having a look at some of them on the weekly time frame, we can see with the NDX 100, we still have this key resistance here sitting up at, let's move the mouse, so 13,200, that's really that level that they need to beat. There is a fair bit of support though down at 12,953. That level has continued to be in play for nearly 4 weeks now. We've seen that buyers have been defending there, but they have been stuck in this position here. So it looks like a normal consolidation pattern at this stage in its current uptrend. So what we really do need now is either buyers to really get some momentum going and break out to confirm a new continuation, or a break and a close below to start putting new pressure back on the trend. So the SPX as well, it's a similar story. We have a lot of resistance up anywhere sort of above this level at 41.49 up to 41.50 into 41.56, and there's this plenty of resistance up here, and that's been going all the way back to November last year, and we can just see that level there that's been blocking any type of buying attempts. So this trend here is more starting to turn into a range, as you can see. We had that nice leg up, and it's just continued to consolidate, but there's a lot of buyer support there. But it still doesn't look like a very convincing bar just yet, and we really want to see a break above this resistance to really signal that there's going to be a new push higher. The US 30, similar story, but it has a couple more layers of resistance. We have this resistance here at 33,990, and then we have more key resistance all the way up to 34,406. And again, nice fight back this week. We still have this up leg here. It's broken the trend. We just need to see a completion now with a break of this resistance here. So metals, gold obviously with the dollar jumping around, it's had a pretty mixed week. We did see a move back up to above 2,000, but it's been trimmed back, and currently it's sitting under 2,000, and has been a decent week, but not as volatile as we've seen. It's still right up the top of the trend. I think they are still trying to work out its true value, and resistance is definitely set here at around that 2008 point. Oil took another leg lower this week, so it's made it 2 weeks in a row now. It has filled the gap. So we were wondering if we were going to see a gap fill here. It did take a bit of time, but we have seen that gap fill now. And just on the daily chart, this trend is definitely down at this point in time, and we are seeing a pretty normal looking bear market rally. I hate to say that, it's just a typical counter rally in a downtrend. So we saw one here, and we're seeing one here, these two inside bars inside this bar. So we'll look to see if buyers can hold this level here as support, or if we do see a breach, and will it move back down to possibly maybe have a test a bit lower. But on the weekly, we can see this key resistance point here. So we did think things were looking pretty positive for oil when we saw a break above this resistance here on the back of that gap. Had a nice push higher a few weeks ago, but once again we've seen resistance develop, and that's at 82.73 up to 83.40 area. So we really need to see a break of this resistance to get this back on running, as this range really does continue to play out, even though we've had one small break here and another break here. It really does continue really to just be in a range play at the moment. So be surprised with OPEC if they'd be happy about this. They probably expected a slightly different result, but I think there's still a few worries running around with demand and just how the state is of certain economies moving forward, and that all has an impact on oil moving forward. So we're going to just touch on some of the things that happened today. So as the Bank of Japan held rates as expected, so we'll move over to the dollar yen. And we can see on the daily chart here a strong move higher after setting up, the support here at 133.62, and it is trying to edge above this resistance level here at 134.74. So we would like to see this bar hold with even a bit more of a push higher to signal that this trend is going to continue, and we have the continuation pattern really in play. So some of the comments today out of the Bank of Japan. So for the financial year 2003, they saw their CPI at 1.8 versus 1.6 previously. They see the financial year 24 CPI at 2% versus 1.8%, so they're seeing it a bit higher, and they're seeing the GDP at 1.4% for 2023 versus 1.7 previously, and they're seeing 2024 forecast 1.2% versus 1.1%. So a little bit more positive there. Some of the other notes here that the Bank of Japan is looking to scrap forward guidance on interest rates, will add easing without hesitation if needed. Price risks are skewed to the upside for fiscal 2023, downside for fiscal 2025. Broad perspective review of the policy from 1 to 1.5 years, as that was also released before the monetary policy came out in the outlook, and so they are prepared to, they are going to leave the YCC, but they are prepared to move if they feel it's necessary. So at the moment that's all being taken as bad news for the yen, and we're continuing to see these strong gains against the yen from the risk majors at the moment. So we did look at the euro yen yesterday as a continuation. Look, it had a very deep retracement yesterday, but we are seeing a strong move back above that first target we saw, and we'll look to see if this can continue, if we can get a new test of that previous high. The Aussie, which was flattened early in the week due to the CPI, it's bouncing back quite nicely, and the pound as well has put in a nice move above this resistance point here at 167.64, and obviously the next point we'll be looking for will be 168.89 if things can continue to carry on. Cryptos this week, there's a couple of things to have a look at. So Bitcoin, and generally cryptos have had a pretty solid week after last week's pullback. Bitcoin's still not yet back up there, but we're seeing a nice level of support here at 27,448, and we're wondering if we can see a new test and hold really back in the 30,000 area. There is a bit of resistance up at, this area. You can just see it here across to here, and that's around that 3,304 area. BNB, I was looking at before, it has a lot of key resistance to beat at this point at 337.90, and that really needs to be beaten to get this trend back on track. And Ripple, which has had a bit of a mixed week, there's a fair bit of volatility in Ripple this week. We had that single day which just jumped around in an 11% bar. So far today we're seeing a bit of a new move up, and we're hoping to see if we can see a bit of a test of this week's highs. And Ethereum, which has had a nice rally yesterday, it had another really volatile day the day before, and so far we are seeing that, like Bitcoin, it has a bit of short-term support setting up at 1838, but it really does need to get back up to that 2000 level to start testing some of those previous highs that was set a couple of weeks ago. But other than that, some of the other meme coins like Doge, Doge isn't doing too much this week. It's pretty flat, and Canando as well. We just see that short-term support at 37.37, and it has this resistance range really to beat at 0.45 to get this trend underway. So that's some of the things we've been watching this week so far. Now we're just going to have a look at what's coming up today. Later today, to end out the week, we have obviously the press conference from the Bank of Japan. We have Canadian GDP, and we have the core PCE price index And we also have the employment cost index out of the US as well. So looking for 1.1%, and core PCE price index looking for 0.3%. And sorry, another one that's coming out during the day, probably most likely to the European session, would be the German prelims CPI month on month, and they're looking for 0.6%. Now, some of the keys coming up next week. The Australian cash rate, which they are already starting to look at a hold at 3.60%, which will probably do a bit more damage to the Aussie dollar if we do see a hold, depending on what the RBA say about the future guidance, but that could set up a bit more selling there. And we also have the FOMC on Thursday, which will be one to have a look at, and rates are expected to be increased at this stage to 5.25%, but I do wonder if what the Fed will be saying about moving forward from there, and what their tone will be. And so funds rate and the FOMC statement coming out on Thursday, May the 4th. And the European Union as well, we have interest rate decision and the policy statement and the press conference. And to cap off the week, we have Canadian and US employment data, so the non-farm payroll, average earnings and unemployment rate, following on as well from the US Treasury currency report on Saturday morning. So with the market still being open for just a couple of hours into our Saturday morning, that can make things pretty lively. So that's it for today's market wrap. So we wish you all the best for the weekend. Hope you have a great weekend, and enjoy the rest of your day, and good trading, and thanks very much for your time, and bye for now.